Hey everybody, welcome to HEX Token Channel, your host Superman in the house. Here we're going to have a great video and we're going to look at is HEX out of the bear market for HEX, and we're going to have a good look at this. So I hope you guys enjoy. Leave your comments after the video. Let's get into it, folks. So at the moment we've got HEX at 6.5 cents. We've had a big day in the office too. We almost we got over to 7 cents there, 7.024 on a nice little spike during the previous live stream. Very bullish move here for HEX, and of course we've had the liquidity reset to help this along. So very little or thin liquidity on the sell side, and of course that means people go over the top and have to push the price up. So pretty exciting. We've obviously had lots of awesome updates from Richard Hart around Pulse Chain, the testnet v3, and of course those have been a big deal since Pulse Chain is going to be the first proof of stake fork. So bullish stuff ahead of us. Now let's have a look here. We've got the chart that's on the daily for HEX. It is on log scale and it's auto reset for scaling. So let's have a look at all the way back to the top of the bull market, and we can see that that was around about the 19th September there, and the price was around about, on this chart, around about 51.8. So if we go all the way down to the bottom of the price there, just below 1.7 cents here on around about the 28th of December, that's about 465 days until we hit that bottom there, 107. So that's kind of where we are there at the moment. So that is down about 97%, just under 97% there during the HEX bear market, which was pretty big. 97% is no joke. But of course, HEX is one of the few coins that's done a 10,000x, so you have to take that into account as well. So let's have a look at the bottom here, based on the 20th of December, and we can see that we've actually risen back as high as 309% there, currently up around 283% in 54 days, which is pretty, 55 days, yeah, 56 days there, which is pretty good. So that's kind of where we are at the moment. Key things about, we've got two, I guess, indicators indicating that we've beaten the bear market and that we're now moving into more of a either the way sideways or bull market action. And of course, that is the fact that we've already passed over quite a few hurdles here. So we had these as we in the bull market we got up to 52 cents. As we started into the bear market, we came down to 35 cents. We then came down in May 22 down to 20 cents. Then in August we came down to 7.3 cents. Then in late December we came down to 5 cents. And then finally 3rd of December we came down to 3.3 cents. And of course we've managed to break the 3.3. We've broken the 5.5, and now we're attacking this the 7.3 cent mark at the moment, and we got very close today because we got just over 7 cents. So that means that's our first indicator, and we're actually getting higher highs here. So that's really neat. We had all these lower highs here. We're now getting higher highs and breaking through the downtrend. So that's really positive. But let's put it in our overlay, because that's the first indicator. So the first indicator is looking really bullish. But let's add in the overlays, and we can see we've got this blue line. This is the long-term bear resistance on the log scale, and we can see that starts at the top here at that 52 cents at the peak of the bear market, and then of course it's also toppling off on this one here at 35 cents in January 2022. That sort of sets our resistance there for the bear market, and of course this is our second indicator, and of course this is looking very close to breaking out. So this is currently, if we tried to do it today, would be about 7.6 cents, and of course onwards we need to break over that and close over that on the day. So that's looking very close indeed. Now we actually got pretty close to it when we were up at 7 cents there, because that is only about 7 or 8% to get there, which is pretty cool. At the moment, of course, if we let's just take away the scaling. If we were to do it now from where we are at 6.5 cents to get to 0.7.6, that would be about 16% increase there. So very easily doable within a 24 to 48 period, which is pretty cool. Obviously, as we move forward in time, the target for breaking out of the bear market gets lower as well, and so even by the 6th of March there, perhaps when we might get V3 testnet out in 2 weeks time, that would be around about a 7.2 cents to break out. So it's coming anyway, so it's going to be pretty cool. And but the stronger it is, the better. Breaking 7.6, and then of course if we rally out of there, get profit take, come back down, bounce off this blue resistance, and that becomes resistance, becomes support, sorry, rather than resistance, which is what it is at the moment. So if it breaks out, comes back down for support on this blue line, and off we go. Now, the chances of going sideways probably low, given the fact that we got testnet V3 coming out. We've also got the Shanghai March fork there as well for ETH withdrawals. That's bullish for the general market. And of course, in terms of financial, the Fed increase is pretty much priced in. So it's really going to be the SEP forecast, and of course the tone in the future that's going to be interesting there. So that's looking pretty bullish and looking good. So I think we're very, very close. Almost but not yet is the way I'd put it. Almost but not yet, but very, very close. As you can see, the gap is very small indeed. Particularly when we were down here at 3.3 cents. That was quite a long way up to 7.6, but now that is in sight. So I think we've got one out of the two indicators, and we're about to get the biggest one, which is this long-term resistance and break out of there. So looking really good. Let me know in the chat what you guys think. I'd love for your comments on that one. But let's get some more confirmation here. We've got the BTC chart here for Bitcoin and Coinbase data here. We can also see the long-term resistance, and of course Bitcoin broke out of that, and we just got a golden cross here, the 50-day moving average, EMA, exponential moving average over the 200-day moving average. The 50-day is in purple, and you can see us breaking out of there. So we've broken the downward resistance on Bitcoin. We've also got a golden cross, looking very good indeed. So that's also supportive. If you want to think of as Bitcoin as the ocean, and HEX and all the other coins and tokens as big giant ships, then obviously it's great to have the ocean rising, and all the ships are, I guess, moving faster and upgrading. That's pretty cool. So that is where we're at the moment, and Bitcoin's looking pretty good there at 24,900. And I kind of see the top of this range at 30,000 in this particular move, and it may come back down. Obviously, we've got looked at volatility between March and May with the Fed and stuff like that. But in any case, crypto may do its own thing. That does happen too, and is slightly less correlated to the stock market and other stuff that we've seen before. But you can see that in the bull market, when we had the double tops, we came down to about 30k. So that's an interesting bounce point there. So interesting there. I do suspect we will come down that volatility between March and May, but of course HEX may not do that because HEX has Pulse Chain coming as well. And of course we've got the Ethereum as well. We'll do pretty well also. So that's kind of where I feel there. Hope you guys enjoyed that. Looking really good. So in conclusion, we've got this indicator beaten. We've got higher highs coming in. And of course we're about to beat that long-term resistance. And of course Bitcoin itself has broken out of its long-term bear market resistance as well. But of course may go up and move sideways. I don't suspect we'll have that pattern. I think we're probably going to go up and to the right. Anyway, I hope you enjoyed that. Take care everybody. Bye for now.